9th of November, it is Nykaa that had tumbled below 1,000 rupees a share earlier this week, back convincingly above that, trying to reclaim 1,200 crores. Yesterday, the company came out with its quarterly numbers where we've seen the profit after tax come in at 5.2 crores versus a profit of about 1 crore exactly a year ago period. Nearly 67% of the shares, like I said, will be freed up in about a few days from now. Falguni Nayar, as well as Adwaita Nayar, her daughter, now here with us on ET Now to talk about the road ahead. Welcome, ladies. Good to have you here on the show. A lot has been said about the festive season rub-off and the numbers that has been declared. We've seen the positive reaction on the stock markets as well. Adwaita, I'm going to begin with you and try and begin with the trends first, because you're also looking after the fashion segment. This has been your idea, and the numbers do reflect how the fashion business is picking up. Festive season, Diwali is behind us. The big, fat Indian wedding season is here upon us. What are the shopping trends looking like? Are Indians shopping carts at checkouts much more now?
Q3 is always an exciting quarter. I think it's seasonally very strong with lots of festivals and lots of celebrations. So both our beauty and fashion platform have truly embraced that and really created a lot of events to serve the customer in and around that. We're seeing strong consumption across the board, and we're feeling pretty good about the business.
And Adwaita, what about the customer acquisition? How exactly is that also shaping up? Can you help us understand how it's different for business and fashion?
We do, we do see some differences in our beauty and fashion marketing costs. The differences really stem from two reasons. The first is just, where we are in terms of both businesses from the stage. So fashion is obviously a much newer business, just about 3 years old, whereas beauty has obviously crossed the 10-year milestone as well. So that's one aspect that makes the marketing costs a bit different. And the second, sort of in line with that, is beauty sees a fantastic repeat behavior. And we have, the existing cohorts that are consuming extremely well. Again, because fashion is newer, that is slightly less developed. But again, we're seeing very promising results on the repeat side of the behavior in fashion. So this quarter, for the first time, we've released the metric that 66% of fashion GMV is coming from repeat customers. So we're pretty confident that over time, the similar benefits that beauty saw from a retention and repeat purchase behavior point of view will be seen in fashion, and you'll see the marketing costs sort of converging and coming to similar levels over time.
Ms. Nayar, good morning. So how are the volumes in the non-metro cities? Are customers holding back on any kind of discretionary purchases?
Not really. I mean, in the sense that, look, I can't talk in those general terms. Basically, I think we are seeing that this this September quarter, which had certain festive periods as part of that quarter, including Navratri, was a good quarter from Indians wanting to spend a little more in these discretionary categories. It was linked to their aspirations about going out, after the COVID after COVID was subsiding. There were a lot more outdoor activities in terms of whether social gatherings or expected weddings coming through. And I think some of the consumption was driven by that.
Adwaita, have you started seeing synergies from the LBB acquisition also? What are company's acquisition plans going forward?
We really like the LBB business. I think LBB over the last decade has really created a niche for itself as, a very strong voice when it comes to curation. They are truly tastemakers, and, they are in many ways, the consumer's tastemakers, often spotting really interesting brands and experiences and so forth. And we felt that their whole content play centered around curation and sort of tastemaking was very synergistic with what we often try to do on the beauty and fashion side. So we're excited about the acquisition, and it's still early days for us here. But I'm sure there's a lot of synergy that will emerge from here.
Falguni, let's address one concern in the market, that competition from here onwards is only likely to intensify, especially with Reliance reportedly entering this space as well. What would you say is your moat in the business, and how will market dynamics change with such a big player with deep pockets entering into the market?
I think retail is a very big industry world over, and all over the world, there are dozens of retailers who retail beauty products. Some of them are specialty retailers. There are others which are pharmacies that retail. There are other retailers which may be like certain amount of beauty and personal care is even retailed by grocery stores. So I think it's not nothing new, and I think Reliance is very large in retail, and maybe this was a logical extension for them to move into beauty as the category grows. So in my mind, retail is not is a very large business, giving opportunity to many brands as well as many retailers to have, and of course the consumers are many and large. So the industry size is so large that it allows every player to have a play.
Adwaita, the other challenge, do you sense or think that success in the fashion business can be difficult given, again, high competition in the category, and because it's such a large unorganized pool, and any gap that you think you could plug in when it comes to your fashion portfolio?
We're really excited by the sheer size and market opportunity that fashion presents. I think by, many reports, it might be somewhere between 5 to 6 times the size of the beauty market. So the sheer market size and opportunity is really, really exciting. Within that, we think that there's an opportunity for multiple players to exist. As with any sort of mature consumption economy, you'd see multiple players existing, providing different value and different propositions to the customers. So we are trying to carve out a proposition for ourselves, which is much more about fashion forward, being very trend driven, being a platform that doesn't talk discount and price all the time, but rather one that shifts the conversation to style. And so that's been the positioning that we're going for. And we do feel that a lot of our metrics suggest that our positioning is holding true. Our average order value is over 4,400 rupees, which is far higher than typically what the industry sees. We also see that 24% of our sales comes from latest season sales and latest season merchandise, which is again a sign of a very fashion forward consumer. So yes, to answer your question, really excited by the sheer size of the market opportunity. Sure, competition exists, but there are gaps and propositions yet to be taken, and we're taking one of them.
Right, Adwaita, morning. I want to also understand what are the company's physical store expansion plans, particularly for fashion, and what's the CapEx plan down the line?
Yeah, sure. Happy to chime in on that. I think we do believe in omni-channel generally. We do believe that online and offline work hand in hand. Overall, today we have about 124 stores. 2 of them are fashion, and those were opened last quarter. And so, yes, we're sort of starting to tiptoe into our fashion offline strategy, and we do believe that offline will have a role to play. But again, it's still very early days, and we're figuring out what the right format is, and then we'll pursue it once we have a little bit more fit between format and, and the success of the format.
Right, and Falguni, given that you've already delayed the bonus record date to the 11th of November, that could arrest the selling after the record date. What is the feedback from anchor investors that you're getting post the anchor period ending? Do you think there'll be any selling pressure?
No, I see. I just want to make it clear that I think the record date change is not really a change, but that was the right record date given the fact that the board had approved it on a certain date, and there's a certain time given for voting, which is about a month. And then we were informed that the record date can only be after 5 working days, a date after that that voting ends. So because of that, it was a logical date. Maybe there was certain misunderstanding in the beginning, in terms of what it was understood as a record date. So apologies for that. And I don't think it is linked to expected selling or anything like that. We also do believe that because many of the shareholders can sell 1 out of 6 holding that they have, even before after the record date. So I don't think it was linked to that. I just wanted to also say that we can't speak on behalf of our investors and what they intend to do. I always hope that we are building a solid company where investors would like to stay for the long term. However, they may have their own requirements for which they may sell part of their holding, but we cannot comment on that, unfortunately.
Yes, can't comment on that as of now, 9th November being the record date. but we will see, of course, more shares entering the market. Earlier this week, Nykaa was below 1,000 rupees and on a strong footing now. But Falguni Nayar, to talk a little bit more about that. We're talking about the winter season. I don't know, makeup, cosmetics, lipsticks are a girl's best friend. But having said that, you've shown in this quarter that, you've not been dampened by inflation. But when we talk about the winter season, capital that is being protected now by startups, by unicorns, by all new age companies. How are you approaching this at the moment? Are you conserving your cash, increasing the cash runway, or is this a time where you're going to open the purse strings, spend?
I think Nykaa is one of the few companies that is very efficient on return on investment. You are aware that before going public, it was less than $80 million we had raised to reach the size and scale that we reach. And even post during the IPO, also, we didn't raise very large amount in the company. So Nykaa has been always very prudent about the capital spends. And of course, we are growing the business for the future. We are investing in new stores and we are investing in warehouses, as well as we are building new businesses. But most of those we are funding partly through our own resources, and very little is being used from the funds that we had raised during the IPO.
Well, ladies, really appreciate your time. Thank you for joining us. If I look at the market right now,